What's good, everyone? This is Dr. Nee Darko. Make sure you hit the subscribe button below so that you're always up to date on the new uploads as well as alerts on this show. The other thing that you can do to help build this community is make sure you leave a comment below. Let us know what you like, what you don't like about the show, and ultimately, let us know who's winning these arguments, because I need to know that I'm beating Renee in these debates. Run the tape. I'm always getting letters in the mail from the American College of Surgery. They have their own disability type of insurance, right? That you can apply for and get. Talk to us about, like, if you could tier it out, right? Like, if you can say, like, you got your own disability insurance, that's one level. You've gotten something that's through your medical society, that's at another level. And then you got one at your job, that's to another level. Talk to us about, educate us on what's the better one? What's the worst one?
When you're eligible.
Yeah.
You're not,
how does that work?
Yeah. So a group policy, sometimes you don't have the option. So because most groups have to have 70% participation. So they really want everybody to sign up, because if they don't get that participation, again, all the unhealthy people are going to take it. The healthy people go elsewhere. So you usually can't opt out of a group policy. Sometimes you can, sometimes you can't. But again, it's not going to be nearly as comprehensive as your individual. Sometimes you just don't have a choice. So that's the group policy.
So that's what you would get at your job.
That's what you get at your job.
You're a resident or you're an attending at a hospital.
Yeah, you work at university hospital. They say, here's what we provide you. And then you have to sign up. So now some of them say you can also opt for more coverage, meaning you can, we give you X amount if you want to buy more, you can sign up for more coverage. Great option, especially if you're unhealthy, you can get it through your employer. So the benefits of the group is you don't have to answer medical questions. So especially for somebody who has any kind of pre-existing, that's really the best way to go.
Yeah, I
get it.
Yeah. So now if you're healthy, you have all the options. The individual policy is going to be the most comprehensive, but it's also going to be typically the most expensive, because it's the most comprehensive. And again, there's ways we can price it and put things on or off the policy to try to work with that premium. But that's going to be the most comprehensive, especially because it's got that own occupation definition, meaning you can't do your specialty. It's going to pay you, even if you could do something else. Now, I didn't mention there's really two ways you can file a claim. That own occupation is for total disability. So many other types of claims have what's called a partial disability or residual. And so what that says is you only need a 15 or 20% or more loss of income to trigger a claim. So I've got people right now, they're going through chemotherapy. So the first month, maybe, they're still working, but as time goes on, they can work less and less. So they're not totally out. They're still working, but on a limited basis. They're still able to file a claim. A group policy won't let you do that. It's all or nothing. So that's another reason to have an individual policy. I have people right now, they have carpal tunnel, and so they have to cut back. They just can't work full time. They might have that for years. So again, a partial disability type of claim. So that's why the individual one is superior. Again, you're going to pay more. The association is kind of in between. So it sometimes has own occupation for like 2 years, and then you have to be totally disabled. The premiums are usually less, but they go up every year. So it becomes really expensive. I usually get people calling me in their 40s going, I've had this association plan all these years. Oh my God, I'm paying out the nose. It's not that great. So again, the association could be great if maybe you're a locum and you don't have a group policy, and maybe you can get it through the group. Some association plans don't ask medical questions. So I kind of consider that a hybrid of the two.
Okay. What about someone who, they hear this podcast and they're like, man, like I really want to be able to talk to someone about this, but I want to educate myself on this at all also, because, it's like, I liken it to when you go to a mechanic. The mechanic says that, your CV joint needs to be replaced. Like, what proof do you have to say that my CV joint does not need to be?
Trust. You've got to trust him.
Right.
And I don't know what a CV joint is. And so if I'm at a good mechanic, if I'm at a good mechanic, I'm like, okay, do I need to get another opinion, or fine, I'll go with it. So there's several ways. So a lot of clients come to me and they trust me because I've been doing it a long time. Oftentimes they're referred, and I can either walk them through and tell them everything they want to know. Some people want to know everything, and some people just say, here's my situation. What do I do? So there's really sort of the gamut. So we're actually in the process, we're putting together a lot of YouTube videos to really get into the nuts and bolts of all of the insurance, because it depends. You can get as in depth as you want or as generic as you want.
So what are some basics? What are the things that they need to know? Like obviously the end product, which is what the premium is, they're going to know that. But is there things that they should be asking? Is there a certain amount of coverage that they should be looking for? Is there a certain type of lingo that they need to familiarize themselves with so that when they talk to you, it's a much easier conversation, or at least something that they feel more equipped with when they walk through the door, or they know get on a phone and say, hey, I need X, Y, and Z, and this is why.
So I think one of the biggest questions that I ask people is, how much do you need? And a lot of people don't know. So some of that depends on their own, because people say, well, what did my friend get? I'm like, well, it doesn't really matter, because they might have a totally different situation. It's like asking, well, what kind of house did your friends get? Well, they might have different needs. They might have 6 kids or whatever. So it's really important to figure out for your own self how much you need on a monthly basis. If it hits the fan and you need to replace that income, how much do you need to be able to pay your bills? So when you're looking at disability insurance, you're always looking at it in a monthly benefit amount. So even if it's group or if it's individual, it's a monthly benefit. Individual policies are tax-free, so you're covering take-home pay. There's only a maximum amount you can get based on your income. So you can usually insure about 80% of your take-home pay or about 60% of your gross income. Because some people say, well, I make $10,000 a month. Why can I only insure it for $6,000? Well, you're not taking home $10,000 a month. You're paying a lot in taxes. So there's always a little bit of a gap. So a lot of people forget that. So I think the first question people need to think about is, how much do they need to have? Because that dictates how much it's going to cost. So maybe you're eligible for $10,000 a month, but maybe you only need $8,000 a month. You don't need to pay for more than you need. So that's the first thing. And then how comprehensive do you want it? Do you want all of the riders on the policy, or do you just want to kind of have a bare bones policy to cover yourself? And then a lot of it also depends on your situation. People come to us in their 40s and 50s. Maybe they've paid off their debt. Maybe they paid off their house and they just need to get the kids up and out, or they just need to take care of those next 5 to 10 years. So maybe we do a shorter benefit period. So we really try to listen to the needs of the client and help to customize it. So again, I don't want people to overspend on something that they don't need, but they need to be properly covered. So when they come to us, to answer your question, the most important thing is, how much do you need to have? So how much you need to have, and then we can figure it out from there. And when it comes to budget, we shop it around, look for all the discounts and say, it's going to be between this and this, and help them figure out the best policy.
And so residents should be looking to find out how much they need as a resident, not thinking about as an attending, correct?
So residents can automatically get up to $5,000 a month benefit regardless of their income. And income varies from state to state. So if you're
about $60K a year.
So it's tax-free. So that's actually more than what a lot of them take home. So if you've got if you're in the early years of residency, or you're doing a really long residency, I usually recommend doing like $3,000 a month benefit. Again, just get a policy, don't overspend, just cover your current take-home pay. If you're in your final year of residency or your last 6 months, you can actually get up to $7,500 a month benefit, which is more than your take-home pay. So again, it just kind of depends on where you are in residency. There's no need to overspend or overinsure in residency. The whole goal is just to get that policy and capture that discount. Because when you go to increase it, you'll still increase at the discounted rate.
So for all the surgery residents out there, don't go breaking your hands just so that you can make more money.
At least know you're going to have to wait 90 days before you get that money.
Before you get that money, right.
$5,000 a month, they're going to be like, gosh, I was really hoping for a lot more than that. Why did I do this whole residency? So that was a lot of effort for $5,000 a month. So
I do have a question about locums, purchasing your own disability insurance, because you're not, guys, once you go on your own, you're not going to have a group policy. So you're going to have to purchase your own disability insurance, or it's very prudent for you.
As a locum.
Paying for your disability insurance personally, like out of personal funds, or using your business to pay for it. Talk to us about that.
So you want to pay for your disability insurance with after-tax dollars, personal funds, because then the benefits are tax-free at the time of claim. So you're not going to really get much tax benefit by deducting the premiums, but the difference at the time of claim, if you have a $10,000 a month benefit, getting $10,000 tax-free, or $7,000 a month, or $6,500, it's going to cost you a ton if you have to pay taxes on it. So always pay with after-tax dollars. And another thing is, if you're currently working and thinking about becoming a locum, you're better off getting the policy while you're employed because you have a guaranteed income and you can show that pay stub. Once you go out as a locum, you will have to show an income pattern for at least a year or two. So you might be flying without insurance for a year or two. It's because you need to show that income pattern. Same goes if you're going and starting your own practice. So maybe you're not going to locums, but maybe you're going to be hanging your own shingle, you're starting your own practice. They need to have that income pattern. So if you're employed, you can get your policy. Here's my pay stub. And that policy just becomes portable. Now, let's say you go buy a $10,000 a month policy while you're employed and you go do locums, but maybe you're just working, every other month and you're not even making $10,000 a month. If you go unclaimed, you're going to get paid that full $10,000 a month because you're paying premiums for it. So they're still going to pay that benefit for you because you've been paying for it. They can't force you to reduce it either. So you might even be overinsured initially or over time.
Wow. Okay, that's actually really good to know.
Yeah, and I've had people too that become stay-at-home parents or part-time. Right. They work part-time, and so
that's my case.
Yes, so they have a bigger policy. Even if, let's say, I've had people who are stay-at-home moms, so they're not even gainfully employed with a paycheck, and if you go unclaimed, you get paid that full benefit, even though you weren't actively working, because they cannot force you to cancel that policy. So, so at that point, it does become a total disability policy. So I've had people who have had cancer or complications of pregnancy or childbirth or things like that, and it's paid even though they weren't on a payroll.
Yeah, I mean, I would imagine that would be a really big concern for people, who say, well, I just had a child, I want to stay home. How is that going to impact my disability insurance? Yeah. So that's actually really good to know.
Yeah.